All right, guys, welcome back to the channel. Bitcoin is down 9 days from the high. The correction is leading many to think that it's over, looking at a potential double top on the chart that could essentially lead to the end of the cycle. But it still seems like there is further to go to the upside, more of this blow off top movement. That's for Bitcoin, probably the stock markets, and of course the real estate cycle, which has also hit new fresh all-time highs. Hit the like, subscribe to the channel. I've got heaps to get through with you today, as I always do in each of the videos. Bitcoin, altcoins. It's not going to be the nicest thing for altcoins, but if you want to hear something different to the same old alt season BS, well, then you found yourself in the right place. Along with that, of course, the traditional markets that are following the cyclical patterns that we're now tracking on the channel for the last several weeks. I'm going to start with BTC, short-term and long-term, give you the levels on the price chart for support in terms of the weak areas and the strong areas. So the strong areas, simply put, are above the 50%. This is this $93,000 level. And for the shorter term, we've got the zone here underneath the swing lows. So typically, if you see breakdowns of the swings, in this case, you can use your GAN Swing Pro. The swings are significant levels on the chart. And this goes for any chart, Bitcoin, altcoins, stock markets, whatever chart you're looking at, use the same principles. That's the beauty about the analysis, is that you can use it across any other chart. So if you get sick of altcoins, you get sick of Bitcoin, you can use the stuff that you've learned on other charts and it's not wasted, unlike some of the other fundamental analysis you might do on particular altcoins. But anywho, the lows are 100 to 103. Anything above this zone is in a relatively strong position, and for the entire move up, above 93,000 is the key level there. Breakdowns of those levels, that's going to be in your weak zone. So it's not that the game is over, it's just in a much weaker zone, which means it could take a little more time to recover, test some of those levels on the way up, and then potentially break out. So I think provided we remain in this zone here, have a correction in June, which is the time frame that we've been following, then I think we've got a better chance to hit that new upside July, Q3, sometime in that Q3 to test those highs. So far in the short term, we've got this rejection. Now, when I opened the video, I had a correction down to the lowest points here, roughly around 20-odd%. The reason for that is that we're watching the weekly timeframes to the upside and how long these movements go on Bitcoin before they pause and or correct. So when we have these long extensions in weekly moves, we've got 6 weeks in this move to the upside, not looking at greens and reds, just in terms of higher highs, higher lows. You've got 6 weeks. So when we've seen these movements before, the market has corrected and it stayed underneath those lows, underneath those highs for a period of time. Now, just to cut to the chase, you've got one here. This is 8 months. This one here is about, you could say, 4 weeks, or anywhere up to the breakout that we just had. So that high to this breakout, so that's 22 weeks. So quite some time there. And then you've also had the 8 weeks back here into the ETF top. And that one there again was about 2 months before it decided to break out. Going all the way back to the beginning of the cycle, you had 6 weeks up, bit of a pause here of 2 weeks, and then a correction into the banking crisis, the non-crisis low, before it decided to break out and consolidate again. So the main thing I see here is that we're in that phase now. What we talked about on the way up, looking at all the statistics and the probabilities, is that we would see a pause for BTC. So that's why I covered the short term. We're looking at some of the downside areas here. What is going to be strong? What is going to be weak? So that you can either stay strong in your positions or freak the fuck out. Entirely up to you. But that's the way I look at it in that case. Now we're here at 6 weeks. So for the downsides, if this is a shorter correction, something like we saw leading into that ETF top, and we see it in terms of percentages for the downside and time, then we just have to measure these here, roughly 11.6%. So I went through and had a look at a few of these. You can see 12% here. We got nearly 12% here. If it's a 1 to 3 or so week correction, it's generally going to be in that 10 to, let's extend it to 20%. So 10 to 20%. If it's going to be a longer correction like this or like this, then we're going to look out to roughly 30 to 35%. So that's the measurement that we're looking at here when I drew this line to the downside. If we're looking at the 10, 15% range, then we're nearly there. We're at 8% here to the downside, to these swing lows, to the current support levels at 100 grand. That's at 10%. To these highs, you're at 13, and then to the 50% level, you're at roughly 17. So any of these movements to the downside would be what the market has done before in these shorter term corrections in terms of time and price. So essentially, you'll be working towards some sort of median, call it an average, same sort of thing at this stage, because all of those numbers basically come out at roughly 1 to 4 weeks and a correction of about 10 to 20 odd %. Now, if we get a pullback, a retest, and at this stage, if we get a bigger retest of 106 and we fail 106,500, then I'll be looking for that longer extension. I think that's a little way off, but just to give you the numbers there, that could leave it down for a couple of months, like you can see here with the larger correction. So starting at potentially a couple of months, and then could extend out to something like this. I think that is far more unlikely at this stage, only because the market's now 2.5 years old. But of course, no one has the crystal ball on this side of the chart. We have to keep it all in mind. But I'm leaning more towards the shorter corrections and the shorter pullbacks here until proven otherwise. The longer ones, just for reference, would take you out to your 20 odds. So that's 20% takes you down to about 89K, 24% takes you to 84 grand, and something crazy like 30 to 33 would take you 78 grand. So 30% decline would be 78 grand. 33% decline would basically take you back to a test of the lows in March and April at your mid $70,000 level. So that's why I said I think this move is unlikely. Something more in, maybe a wick into this range and then closes above on the weekly, that's fine. So we'll just say most of the body of the candle would be in this range here. I think that is far more likely, so far more probable up in this phase of the market for BTC. So if Bitcoin is still in a macro bull, and I'll get to more of the data with the traditional markets, but it's in a shorter term correction, which we can see here, the longest correction down in terms of days, in terms of time, then there's probably, well, we know it, is putting more pressure onto altcoins. Now, it's not over for altcoins. I know I talk a lot about them, but what's happening is you've got a lot of people who are averaging into their losers. So the losers are already losers, and then they're averaging more and more money into those. Basically, this is a quote here from Paul Tudor Jones. If you're unfamiliar with him, go and look it up after this video. He's one of the best traders of all time. This is probably from the 80s. And he has a little post or a little piece of paper here on the wall that says losers average losers. So basically trying to remind himself not to keep putting money into losing positions, because they're losing positions for a reason. Now, you always get the flip side when it comes to retail altcoin traders. They think they have to be in something because it's their only hope of getting out of some shit situation they're in. Maybe they hate their job. Maybe they want to just trade and live overseas or something like that. That's usually the case. That is coming from a desperate point of view. So you're basically in lack, hoping for the best, for the upside, preying, well, these altcoin people online and altcoins in general just prey on the gambler's mentality. So if you don't have a plan, I suggest getting one before just praying that these things are going to pay off. Some of them will pump. And that's why I've got here on the chart, above this line here, around 700 billion for round numbers. There's still a chance because it hasn't broken the 50%, but you're in a rock and a hard place now because the altcoin market is getting rejected at the 900 billion. So basically between this 700 and 900 billion, bit of a difficult place here. But if it can close above these levels, these highs, as we've looked at before, 900 to 950 billion dollars, that is going to be a much stronger position for altcoins to get going, because basically there's no more resistance overhead. So where does this 50% come from in terms of strength and weakness, and why does it matter to the altcoin market? So you can take a look back to the previous cycle. Let's put our 50% on to the all-time high. Bring this down to roughly the cycle lows here, basically 20 billion up to 1.1 trillion. This is what you were faced with at the peak of the cycle, coming down, testing the 50%. There was still a chance, weak bounces, closes underneath, and then it collapsed underneath the 50%. So that's why I put so much emphasis on the 50% level. You can see as it hit that 50% for, in this case, second, third time, it really took off. Like that really just sliced through and said, it's done. It's all over. So that's why I would suggest keeping this on your chart. Have a look at around this 720 billion level. If we see this come down and start to slice through, probably a very high chance that there's no alt season. But for now, there's still a chance. While there's still a chance, remind yourself, losers average losers. There's always a chance when things go up to get into the stronger assets that are going to break through, and you don't have to be in something that just keeps going down. There's so many coins that just keep failing. Yeah, they'll have small pumps and then they'll fade out again. And I hear it all the time. So hopefully you can be making some money in the bull market. And again, losers average losers. Thank you, Paul Tudor Jones. So where this leads us from here, looking at the blow off top, which is continuing, we can see it in the charts. Winner's curse phase of the market. This is where we are. This is the cycle peak before in my opinion, based on the 200 years of data using the 18-year cycle, is going to be a very significant collapse for the housing market, for the economy in the US, and then other countries will likely follow suit, and of course the stock markets. So things are not going to peak altogether and collapse altogether. It's going to be, you're going to see some of the peaks come after each other, and then the corrections and the lows come before each other. What I'm saying here is you got the house prices and the economy. They'll probably peak first, but it will be, you won't necessarily see it because you don't have a chart for house prices telling you it's all over here and it's all collapsing. But you do with the stock market. The stock market will typically peak after the housing market. So we're looking at sometime after 2026 for the stock market, and then the correction. And then I think, considering what we've seen before, the stock market will low before the housing and economy bottoms, because the stock market is forward thinking and it's probably looking at something like suggesting that the hard times are going to be over in the next 6 to 12 months. Therefore, the smart money is front running the economy, putting in that low in the stock market. It'll potentially go up, and then you'll start to see a low or a higher low form for the US real estate and the economy, similar to what you can see on this chart here. So that's a bit of a rough guide leading into the next 5, 6, 7 or so years. We're still seeing signs going up. Like we can with the S&P 500, the cycle has continued on here. The grinding phase through May into June has happened, and I'm still looking at the June cycle here for a correction in June. So this is the S&P 500. We've seen it climb a little higher here on our 20-year and our 5-year chart. So it's a bit of a grind higher. Bull market is still on. We've tested 6,000 points again, 5,999. The other day last week, we got to 6,008. So it definitely wants to grind higher. But I think there's some sort of correction coming soon. That's just short-term stuff. The longer term is still looking like it wants to push higher. That's our indicator here. The copper index, or the copper chart, is also showing further upside. You've got higher lows continuing to form over the long term here. And copper is used in the economy to a greater degree. Therefore, it has been a relatively good indicator of economic strength and weakness. You can see some of the peaks that line up, that show up with the S&P 500. You've got the stock market peaking. You've got copper prices peaking and then coming down together here. You got a big move out of the low early on, and you had a low prior. So you had the low in copper before the low in the stock market. So you could even see that some of the smart money was thinking that the economy is going to turn around, and they started buying up the copper before even the stock market load. So that's the color. The color chart is the copper, and the white chart is the S&P 500. And then copper, of course, you can see it run up here into 2011. You had a big boom there, of course, with gold and silver as well. And it seems like we're in another phase of copper wanting to break out. Look at these highs that continue to form, higher lows that continue to form. I think we're on the verge of another copper breakout, and we're also seeing that with gold hitting fresh highs at $3,500. I think silver's going to break out, and you're seeing these commodities also consolidating before this next move to higher prices, which, as we've looked at before, part of this winner's curse phase with prices running up, especially as we're in the commodity cycle as well. I'm not going to dive too much into that. There's too much information already, I think, in the videos. If you want more on that, obviously hit TIA Premium. We put all this together for our long-term trading and investing plans. You've got plenty of courses to get through there as well. The bonds are climbing higher again after a mainstream headline news announcements on the 22nd of May and 23rd of May, which formed a local low. So there was a big freak out a couple of weeks ago when bonds hit fresh, 1.5 year lows. Everyone freaking out across media, left, right, and center. Here we go. CBS News, it was on CNBC. The Dow Jones was down. You had talks of treasury yields spiking and the bonds collapsing. You can see here with the yields, they also peaked right around that time there at the top, 22nd of May. That was the 10 years. The 30 years peaked. They broke 5%, and that started to make headlines. And now we're seeing a sell-off here. And even just in the last 24 hours, 2% drop on the 30-year yields. So although I don't think that this is completely solved, at least in this short to medium term, the emotions are dropping, the volatility is dropping, and there is more confidence starting to come back in the market, potentially because Wall Street believes that there's a TARCO trade on. Trump announces tariffs and then he chickens out. That's the TARCO acronym. So he puts the tariffs on, markets dump, and then slowly pulls the tariffs off and the market rises again. So they're all sort of figuring it out that it's just BS for the time being. The VIX volatility index for the S&P 500 is also climbing or dropping back to lower volatility. And you can see the white arrows I've got here on the chart. In those occasions, once it's been above roughly around 17 on the volatility index for several weeks, so basically it broke out of this line, went higher, stayed above this level for several weeks, and then as it comes back down into this zone, it generally stays underneath 17 or not far away from it for a reasonable amount of time. This one here is probably the weakest in 2021. However, you just come off COVID, of course, but in that time period, the S&P 500 still had quite some time to climb to new, fresh all-time highs. The volatility index broke down roughly around March, April into the bull market zone, and the S&P 500 still had about 9 months to go to get to that peak. So that's one of the shortest ones. For the longer time, the longest times, you can look back here in April 2023 for it to run into this peak. That was February 25, so nearly 2 years into that peak. And then if we keep looking back, looking at all the back testing here, as it was out of the 17 and then back into the 17, it stayed underneath the 17, ran into a top about 12 months later. So there was still more time left in that particular move as well. And we can go back and do all that, but I think you're getting the point. As we see this drop underneath 17, a lot of people start to scream saying that this is time for a collapse in the market. And what the data shows, if you're able to read it in this way, I guess, is that there's probably more time left to the upside in the S&P 500. Shortest case here, 9 months, here 2 years, and here roughly about 12 months. Where does that take us? It takes us sometime into late 26 or into 2027, which is essentially what we're looking at with our indicators, essentially what we're looking at with our winner's curse phase. So day by day, I put together all of the information that I think is important. It's what I use for my own investing. So essentially, that's why I say it's how I'm investing. I'm obviously far more heavy with BTC. I don't see any of the strength there for altcoins yet. But if you're a short-term trader, you got the volatility. You can trade those things, whether it's day to day, hour to hour, maybe even weeks if we get enough of a run on. But at the moment, it seems like it's an hourly game or a daily game for altcoins to get those breakouts. And the USDT dominance isn't helping things for altcoins. Of course, Bitcoin also had a bit of a correction. You know, we're down to 104, 105 at the moment. And this has been the big talking point for me, is that it's on the all-time support line again. So the stablecoin market, basically your money flow of Bitcoin and cryptos, is not flowing. It's going back into the dominance. And this is your USDT dominance. Therefore, if it goes up, that's bad for Bitcoin and cryptos. And at the moment, that's what we're seeing. It's hit support now for 1, 2, 3, 4, and bounced away on this 5th week. So roughly 4 to 5 weeks, it has not broken down again. So pretty important, in my opinion, to keep watching it because it's what happened at the last peak as well. This time, however, we do have lower highs on the macro here. Last time, we had higher highs. I said lower highs. Yep. And this last time we had higher highs. That was in favor of, well, in favor of the bears for Bitcoin and cryptos. Now it's slightly in favor of the bulls for Bitcoin, and eventually maybe for altcoins as well, altcoin cryptos. So a couple of overhead levels here. 4.75 still remains there, and your 5% level, which was the halfway point from the low to the high in this current run. Two very key levels to keep watching for USDT. If this starts to move higher, obviously we'll see lower prices for altcoins and BTC. Ideally, we get a bit of a stop at some point and then starts to fail again, breaks this low, and we start to go a little bit nuts here for BTC. So in the meantime, are we seeing anything strong in the altcoin market? Well, ETH has been all right. It needs to break out here and consolidate above. I'm going to call one straight line here at 2,900. So it's above the highs, above the 50%. I've been looking at 2,750 for some time, but I really think it needs to get above that 2,900, which has been a key level through each of these peaks, corrections, basically a support level. And at this stage, it'd be a big resistance. So nice clean number, $2,900. Now you're probably seeing this here as well. Local top signal for ETH. We've seen it multiple times in this bull market already, going back to June 22. So that's your 3 years for this bull market for ETH. Each time it gets to 6 or more weeks in a row in the swing, it has been a time for a pause, or in two of the cases out of 4, so 50% of the time, it has been the top. So it's corrected off really bad from those levels. So here is 7 down to the first low, that's 31%. It didn't make it back and then crashed to this low here at 48%. So basically 50% lost. And the next time we got to 7 weeks to the upside, here to the low, we're looking at 66% correction. Now I put this one in here myself because you've got 1 week, 2 weeks, 3, 4, 5. This week here only went below it by about $1 and then it pushed higher again. So all in all, you had roughly a 7-week move to the upside before things corrected. So I'm looking at that as another key local top, or potentially final top signal there. That's why I'm very focused. Well, that's why I think $2,900 is a big level here. We got to the 7 weeks. We've only seen it go above 7 weeks once before it had to pause for about 2 months, and then it was able to go on. So maybe we're in a position like that. We got this week left. If we push higher this week, that'll take us to 8. If we can consolidate above those levels like it did in January 2024, then we'll have a good chance of pushing higher from the base of, somewhere in the mid to high $2,000 levels. So that's Ethereum. Not a bad position there. Something stronger, which I haven't talked about on the channel, is, funnily enough, Tron. This has continued to push higher. Tron USD. Higher highs, higher lows, breaking past these swing tops that had shown signs of wanting to break down. So we can retire this level right now. And this is looking a little bit stronger here. It's also looking okay on the BTC chart as well. Higher lows continuing to form. Now, it's not anything sort of runaway against BTC. So I think it's something to keep on your watch list because it is in a stronger position against BTC. SUI BTC has continued to break down here. So it had a weekly close underneath 50%. We've got another 3.5, 4 days to go for the next weekly close. If it continues in this direction with these closing prices where they are, much, much weaker position. And I would say if it started to close below 29, roughly 3,000 Satoshis, that's not going to be a great area for it. And it's going to take a little bit more time for these altcoins to come back. XRP BTC still barely holding the line here at 50% on 2,000 Satoshis. And Solana BTC continuing the downtrend as well. So it's broken below all 3 of these bottoms here at about 15,000 Satoshis. So this one, and this one here. That's not a great sign for the strength. On their USD charts, doesn't look as bad. But of course, you want to see these things doing better than Bitcoin. Otherwise, we're taking on extra risk for no extra reward. And we don't want to be losers averaging into losers. You can take that one of 2 ways. So Bitcoin still in a very strong position here. Closes above 106,500 this week are going to keep it in that extra strong position. But really, any of those corrections that we looked at in today's video down to those levels at the 50% are basically well within tolerances here of the average moves that it's done after putting in such a strong move here. Like, subscribe, links in the video description for TIA Premium and your indicators. I'll see you guys back here at the next video. Till then, take care. Peace out.